Welcome to the Plan B CRNA podcast. I'm your host, Bobby Jones, and I'm so excited that you're here. The Plan B CRNA podcast is the only show made specifically for nurse anesthetists who are exploring options outside of their traditional career paths. This is the place to expand your mind and your goals as we uncover new ways to produce side income together. Journey with me as I go down various rabbit holes to explore the best Plan B options for you. This episode is brought to you by On-Call Capital. On-Call Capital is dedicated to educating CRNAs and other healthcare providers about investing outside of the traditional stock market. On-Call Capital also provides opportunities for you, yes, you, to create passive income and generational wealth while also lowering your taxable income through investments in the apartment and alternative investment spaces. If you haven't hit subscribe yet, make sure you do that right now so that you don't miss an episode. Thanks so much for joining me today, and now on with the show. Welcome to the rabbit hole on the Plan B CRNA podcast. Throughout my journey in finding a Plan B, I've gone down numerous rabbit holes to figure out which one works for me. Since I've done some of this research already, I only think it's right to bring that information to fellow CRNAs to help aid in your search. As always, it's important for you, the listener, to do your own research and form your own opinions. Everyone's situation is unique, and a Plan B that works for one CRNA doesn't always work for another. Self-awareness is the key in any decision you make, since you must have an accurate grasp of your own strengths, weaknesses, and goals. Well, let's go, gang. Our rabbit hole topic for today is dun, 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 fix and flips. I'm going to kick this off by letting you in on a little secret. I am no handyman. Many CRNAs are engineering minded with an aptitude for fixing things. I'm not one of those people. I always figured that I'd rather work an extra day in the OR to pay for any repairs that needed to be done. And that's the approach that I took with our home. Only within the last few years have I begun to realize the power in the do-it-yourself movement. I've learned how to install a disposal, a new bathroom faucet, ceiling fans, and replace rollers on a dryer. All of this saved me hundreds of dollars and might seem off topic, but I'm going to tie that in a bit later. Bear with me, brave listeners. Now, what exactly is a fix and flip? The standard definition is taking a property, presumably a single-family home, buying it at a discount, putting money into it for renovations, and then selling it for a profit. An example would be if you purchased a home for $75,000, put $25,000 into it for renovations, and sold it a few months later for $150,000. You make $50K in equity profit on the deal. You could do this with other things too, automobiles, old furniture, you name it. It's an easy enough concept to understand, but the process can be much more complicated than the HGTV shows would make it out to be. Speaking of which, let's do a little deep dive into the history of fix and flipping. It all started in the late 1980s during an economic recession. Stock market earnings were down and home foreclosures were up. Savvy folks would buy foreclosed homes, fix them up, and resell them for profit as the market improved. As more and more housing was built in the 1980s and 90s, the idea of renovating older homes became popular. The show This Old House and its host Bob Vila encouraged people to tackle their own home renovations rather than simply demolishing properties. Lowe's and Home Depot stores started popping up in suburban communities, making it easier for folks to just DIY it all. Fast forward to the 2008 recession. The subprime mortgage crisis caused an economic recession. The stock market was down and home foreclosures were up. Sounds familiar. Fix and flipping was all the rage in the 2010s as shows like Fixer Upper, Extreme Makeover Home Edition, Love It or List It, Property Brothers, Fix or Flop, Flip This House, Flip That House, Flip My House, Flip Your House, Flip His House, Flip Any House. Well, you get the idea. They all took off on channels like HGTV, Discovery Channel, and TLC, and everyday people were off to the races. And that's great that all of this stuff happened a decade or more ago, but what does it look like right now? Well, looking at the reality of the situation as it stands today, more people jumped into the fray, and that competition has driven home prices up. For a time, you could just show up for an auction on the courthouse steps and be the only bidder on a foreclosure. Now you're likely to bid against 10 to 20 other investors who are interested in a particular property. To put it bluntly, finding the right home is simply harder now than it was 5 or 10 years ago. On the flip side, no pun intended, many companies have been able to streamline their renovation processes, leading to decreased cost. This doesn't exactly help the newer investor unless you have access to the right network. Plus, those costs can only go down so much, and the margins have tightened considerably. Let's dive into the data a bit. According to ATTOM Data Solutions, the third quarter of 2020 saw roughly 1 in 20 single family and condominium transactions were flipped, which is lower than last year at this time. However, both profits and profit margins increased to levels that we haven't seen in 20 years. The typical gross profit of nearly $74,000 per property translates into a 44.4% return on investment, which is the second consecutive year-over-year increase. What this means is that investors made increased profits on a declining number of deals. In the context of the pandemic, though, it's unsure whether those trends will continue. This year, flipping rates went down in 90% of markets, while profits rose in 2/3 of markets. The highest raw profits were in the West and Northeast, and lowest in the South, something you might not have been expecting. Another data point to keep in mind, the average time to flip nationwide has risen to 192 days, or roughly 6.5 months. That's the highest level since 2003. So, what does all of that mean? Essentially, primary markets have been saturated with buyers, so they aren't as much in play anymore. However, secondary and tertiary markets may still be ripe for the picking, depending on which markets you choose. As they say, all real estate is local. You've got to get to know the market you hope to work in to make sure it's suitable for you. So, how do you break into this business anyway? Well, first, you need a process for identifying distressed and undervalued properties. You'll need to create a sort of pipeline of deals. You won't just be able to buy the rundown house around the corner. You have to know your market and work with the right experts. This usually involves starting and maintaining a relationship with a couple of local realtors or brokers. One thing to note is that home supply from foreclosures has been trending sharply down for the last decade. The foreclosure rate has steadily dropped from 2.23% in 2010 to 0.36% in 2019. Of course, there weren't really any foreclosures in 2020 because they were banned. So, from a high of nearly 3 million homes on the market due to foreclosure a decade ago, we're now around 500,000. Okay, so you expect that foreclosure number to jump in 2021, do you? Well, unlike in 2010, 97% of homes have equity in them in 2021, and only 3% are upside down. This means that most folks will simply choose to sell a property rather than let the bank foreclose on them. Less supply plus more demand equals higher home prices and a harder time finding good deals. Second, you need to be able to accurately assess renovation costs. This typically happens before you even get a deal, as you ideally want some systems and contractors in place and ready to go for when you actually purchase a property. Costs are currently going up for different supplies across the country. Wood prices, for instance, have tripled as a result of the wildfires in the Northwest. Third, you need to be prepared to spend some capital. Get that whole no money down idea out of your head right now. You'll have closing costs on the mortgage, a 20 to 25% down payment, renovation costs, inspections, building permits, utilities and taxes for a vacant property, and other unknown expenses. Plus, you'll owe commission to your agent when you sell, as well as capital gains on any profits. These must be in any projections that you create. I'll take a second here, though, to mention a loophole for some of you. If you're a member of the military, a veteran, or a surviving spouse, you can access the VA loan program. The VA allows you to borrow up to $453,100 without a down payment in most of the country. Now, the individual bank you use may require a small down payment, but that is usually a fraction of what most folks have to pay. To learn more about this program, make sure you check out the show notes for some more details. If you qualify and you aren't using this program to get your real estate investment started, you're really just leaving money on the table. Also, there are people flipping houses that use other people's money instead of their own. This typically requires you to already have a track record of success in flipping houses, though, as well as developing those relationships with investors who have capital to actually invest. It's not an easy path to take, and many people don't get that off the ground until much, much later. Fourth, there is a significant time commitment involved. Even if you don't work on the house yourself, you will still have to get quotes, hire and coordinate contractors, handle invoicing, check on the property, and get the necessary permits and inspections. Plus, you'll probably have to stage and market the home in order to sell it quickly. Fifth, you will need to have a good relationship with your bank. Preferably, you'll work with a local bank that knows you as opposed to a big box bank, as this may provide you with better or more flexible financing options. But investments are risky, which means you still need a good credit score, significant down payment, and good cash reserves on hand. You may even need proven experience as a landlord or property investor. In case you haven't noticed, you kind of need to be a Jack or Jill of all trades here. You should have a working knowledge of construction and project management, building compliance, real estate law and negotiations, and insurance. Sure, you can just hire experts in these fields, but that costs you more money and eats into your profits. I want to take a moment here to recognize how negative some of this sounds right now. But I know that there are plenty of CRNAs out there that are hearing this and thinking, is that all it takes? Honestly, if we can anesthetize an obese patient with diabetes, failing kidneys, and a history of AFib with DVTs and leg stents for an emergency lap chole at 3 a.m., then this real estate thing really seems like small potatoes. So let's get down to it, shall we? Flipping houses is an active business. The BRRRR method, which stands for buy, renovate, refinance, repeat, is also a really effective way to make a living in real estate. You can make a lot of money with these types of investments, but that money dries up the minute you decide to stop flipping. There's no residual or passive income with this type of an investment unless you decide to start keeping a property here and there. That being said, if you could fix and flip just one house a year for 30 grand in profit, that could make a significant impact in your finances. This would probably involve you getting your hands dirty, either through active renovations or project management. But seriously, who wouldn't like another 30 grand a year? In order to be successful in the long term, though, you really need to focus on scaling in order to allow you to keep construction and rehab in-house, as well as having the proper lawyers and realtors involved and compensated. This is doable, but it can take time to build this kind of a team. If you want to find more information on fixing and flipping, BiggerPockets is the best place to go for information. They have numerous books, articles, and a great community that can help you find answers to your questions. The Rehab Financial Group also has some great free information on flipping houses that I've linked to in our show notes. For more information, you can check out all of our show notes. I've got multiple links there to help you guys out in your search. As always, I'd love to thank you for listening to the Plan B CRNA podcast. If you found value today, make sure you hit subscribe so that you don't miss an episode. We also want to hear from you. If you have a question, comment, or potential rabbit hole episode that you'd like me to cover in an upcoming podcast, make sure you rate and review on our podcast player. I check those all the time, and I like to cover those questions in future episodes. If you'd like to know more about me, make sure to find me on Facebook, LinkedIn, Twitter, or Instagram, or visit my website at www.oncallinvestments.com. Until next time, this is Bobby Jones signing off. Thank you so much for joining me for another episode of the Plan B CRNA podcast. If you haven't already subscribed and reviewed the show, I'd be honored if you took the extra time. It really helps to expand our reach and get the word out about the show. If you're a CRNA who is interested in sharing your story on our podcast, I'd love to have you. Please email me at bobby@oncallinvestments.com for more information. This episode was brought to you by On-Call Capital. They are dedicated to helping providers like you develop passive income and generational wealth through investments in the apartment and alternative investment spaces. Feel free to check out their website at www.oncallinvestments.com and subscribe to their free educational email series. You can find On-Call Capital on Facebook, Instagram, and Twitter. You can also check out our YouTube page, where you'll find all of the show episodes along with other educational videos. Thanks for listening, and we'll see you on the next episode.